Hello, good afternoon. This is Mr. Ayazuddin S Khan from Pune, Maharashtra State, India. I am here with new basic things about Income Tax Act 1961 for our discussion. So this basic thing also interesting and also important. So, have you kindly pay your attention to this lecture. So, this new basic thing that we are going to discuss now is loss and its carry forward and set off. Now, let us see what is loss and what is carry forward and what is set off. Loss, if you ask any common man what you understand or what you know about loss, so normally we get the answer like this. I have lost my two-wheeler. Some 1 month back, I lost my two-wheeler. That means somebody has stolen his two-wheeler. That way he uh, understands or take the term loss. Then he says, I have lost my purse while getting down from the train yesterday. So somebody has taken out his pocket when he was getting down from the train, and very skillfully that gentleman, that thief has taken his pocket from purse from his pocket and disappeared. So when he checked up his pocket, then he finds that there is no purse, that purse is gone. So he knows somebody has taken that purse from his pocket. So he says, I have lost my purse. So this is the way he understands loss. Then suppose you forget, somebody forgets, not you, somebody forgets his mobile in the some big shopping mall. He forget there while shopping and come back to home and find that mobile is he has left in the on some counter in the that mall or shop. So he runs to that shop and mall and finds that nobody is helping him and his item is gone. That mobile is gone. Who has taken that? People inside the mall, they say we don't know who has taken. We are busy giving service to the customers. So we have not, we don't know who has taken. We have not taken. That way he gets the answer and he says, I have lost my mobile. That way he understands the term loss. Okay, these are the ways the common man understand the term loss. Loss means, for him, loss means all these things. And strange enough is that if we knock the door of Income Tax Act 1961 or its family members, that is your what you call General Clauses Act 1897 or Companies Act 2013. If you knock their door and ask them, what do you mean by what you call loss? So they are also helpless. Not Income Tax Act, not General Clauses Act, not Companies Act 2013 gives you help to know what is loss. I mean, there is no definition given in this either of these three acts. So it is. I feel it is bad when this what you call the act, Income Tax Act, spends thousands of words to tell about the what you call all aspects about the laws, but it doesn't tell what you call about the what is loss. So it is strange, and it is bad also. As I feel, they should have given, the act should have given the definition, though they don't think it necessary. necessary. It is everybody knows what is loss. Still, for academic purpose, they should have given the definition, because they are spending thousands of words to describe what is loss, other aspects of the loss, except this what you call it doesn't give the definition or description of loss. Okay, we will forget all these things, definition and description. Okay. Let us go to the main what inside the loss provisions. We will go inside the loss provisions. What Income Tax Act has to say about other aspects of the loss. So they are also important. They are actually they are only important as far as topic loss is concerned. So first thing is that the Act says if you have loss in particular financial year, you have got loss. Suppose you are proprietor running some business and you have got loss. For that matter, any company or firm, any what you call person who have already learned who is the person. There are 7 persons. So you have to go back to that definition of person and find out who are those persons. So any person doing some business, and he what you call at the end of the financial year, he finds that he could not earn the income, but he incurred the loss, or he has loss. So then Act says, Income Tax Act says, then in such situation, normally income tax he can also file in such situation. When loss situation is there are the accounts of the proprietor or accounts of the other business houses shows some loss in the particular financial year. So they can they can carry forward the loss to the next financial year. That way they tell. The Income Tax Act is businessman or company, it can carry forward the loss. He can file the return of loss. Just like when profit is there, this businessman will file the company or businessman will file the return of income. But when there is loss, the businessman or company Act permits them to file income tax, return of loss also. So what is the benefit? What is the benefit? Loss is there. Loss is for individual loss. That common man's definition loss means loss gone forever. But here something is different. In the sense, Act allows that businessman or company to furnish the return of loss, and carry forward that loss to the next financial year. That way Act permits or tells about this carry forward. So what benefit of what you call carry forward of loss, no doubt benefit is there. I will tell you what is the benefit, but before that we must remember, when Act permits you in a businessman or company to furnish the return of loss, it puts the conditions on the businessman or company. And what is that condition? The condition is like this: if you want to furnish what you call return of loss, and you want to carry for your loss to the next financial year, then you must submit, you must furnish your what you call return of loss within within specified time, or within the given time. And what is the given time the act has what is the given time the act has given, or specified time, or prescribed time? What is that specified time or prescribed time the act has given to that what you call this businessman or the company? The, the time is like this. The specified time or due dates of furnishing return of loss is the same as the furnishing of what you call return of income. So we must know also, because when you we want to enjoy or take the benefit of carry forward of loss, then this condition also we must fulfill. And what is that condition? That return of loss should go to income tax department on or before the due date given by the act. And what is the due date of furnishing return of income or return of loss? If it is company, then due date of furnishing return is 31st October of assessment year. 31st October of assessment year. If a company has loss and it wants to what you call take the advantage of carry forward, then it has to what you call furnish the return of loss to the department, and then it has to do that thing, that is furnishing of return of loss on or before 31st October of assessment year. It is about company. This provision is for company. Then other persons, if other persons they have loss in particular financial year, and they want to have the what you call benefit of carry forward of loss, their loss, then again same condition, they have to furnish return of loss within the time given by the act. And what is the time given by the act for these people other than company? What is the time given by act to these people? They say, income tax says, if these people or these persons, their what you call their sales, business sales, or their gross receipts, their business sales, they are manufacturing, then sales. The concept of sale will come into play if this company is doing the business of what you call, or these other persons are doing the business of manufacturing. Anybody then, firm, AOP, BOI, and your other entities, other person, if they are doing business and they have a loss for particular what you call financial year, so for them Act says you can carry forward your loss of this financial year to the next financial year, you can carry forward, but you must submit the what you call your this return of loss on or before 31st October of assessment year, provided, remember, note on this condition, provided your what you call your sales or your what you call gross receipt is up to exceeds 1 crore. Exceeds 1 crore. That means it goes beyond 1 crore. Your sales or gross receipts go beyond 1 crore. In that, if 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 that fact is there, then only this date of furnishing of return of loss is 31st October, like company. If suppose these entities, other than company, if these entities or these persons, they have a loss and they want to carry forward and take the benefit of carry forward, so for, and their what you call sales and gross receipts do not go beyond 1 crore, they are up to 1 crore, then for them the due date or the given date for furnishing return of loss is 31st July of assessment year. So this is first aspect of loss that what you call income tax is highlighting. This first aspect very strongly it highlights, and it is important also for the all the what you call people, these persons connected with the furnishing of return of loss, return of loss. So this is important aspect of what you call loss, first aspect. Then second aspect of loss is your what we call if this if you do not file the what you call this return of loss within the given time, then what you call you cannot carry forward, the income tax department will not permit you to carry forward the loss. This carry forward business benefit, the greatest benefit by carrying forward the loss as the Income Tax Act permits you or permit that businessman, proprietor or company or other entities. The greatest benefit of carry forward is that if you carry forward this loss to the next financial year, then you can set off. You can set off the loss, set off the against the income of against the profit of the next financial year. And what you have to set off means you have to reduce the what you call your income. Profit and pay less tax. So this is the greatest benefit. Then another carry forward business, this after what you call furnishing of return, another thing, important thing we must remember is these people, these persons who are incurring losses or who are having losses every year or particular year, only for particular year for that matter, then how long they will carry forward the loss? How long they can carry forward the loss? So there is time limit. The Act says you cannot carry forward your loss, business loss or loss under any other head of income for indefinite period. For indefinite period, you cannot do that thing. Then they have given the time limit. As far as business loss is concerned, they say you can carry forward your loss for only for 8 years. If it is loss under the head what you call capital gain loss under the head capital gain, again Act says you can carry forward that loss for 8 years. This way. Or there is loss under what you call under income from house property. Under that head, if suppose you have got loss, then you can carry forward that loss for 8 years. So, Act has given some what you call specific period for carrying forward the loss. We are discussing business law basically, but then Act says you can carry forward that loss for 8 years. Now, how to compute these 8 years? How to compute? So we'll take some example. Suppose you have got loss in the assessment year 23-24. You have got loss in the assessment year 23-24. So you have got loss, that is assessed loss. Remember this thing, assessed loss. Then financial year 22-23, you did the business and you could not earn the profit, but there was loss financial year. Then comes assessment year. You what you call furnish the return of loss and all these things, and this department people, that is assessing officer, he is called assessing officer, the Lord. the Lord, he assesses your loss. Then it becomes confirmed, and then only that company or businessman is eligible to carry forward the loss. If he has not assessed, and simply you cannot carry forward. So only after assessment, if he assess that loss, because your figure of loss is one, and this gentleman's assessment figure may be different. So that is why provision is like this. You wait till this what you call your loss is this assessing officer assesses your loss, and that is confirmed loss, and that only can be carried forward to the what you call next assessment year. So how that point we are discussing, how to calculate 8 years period for carry forward, because Act says you can carry forward business loss for 8 years. Then how to calculate this period of 8 years? So suppose you have got loss in assessment year 23-24. 23-24 you have got loss. So this you can carry forward this loss for 8 years. And 8 years you compute your or calculate your 8 year period not from assessment year 23-24 but from assessment year 24-25 onwards. That will be 24-25 will be the first assessment. Like this you have to count for 8 years. That way, this is the example I have given, how to calculate the carry forward period. 8 years period is there. Act has given you to carry forward loss for 8 years, and how to calculate carry forward period is like this. If loss is there in the current assessment year 23-24, then you can carry forward loss for 8 years from assessment year 24-25. So this is the time limit given by the Act. This is the time limit Act has given to the business people, and business loss this way can be carried forward. You can carry forward this business loss for 8 years. Then your capital gain loss, that also you can carry forward for 8 years. and the calculation, computation of carry forward period is the same as I discussed just now. Then your loss under house property, that is also what you call the same 8 years period, and the way of computing is also the same. So these are the time limits the Act has given for carry forward. Okay. Then what is the next what you call aspect, important aspect of loss the Act discusses or tells us? So next aspect is set off. After carry forward set, we have taken this carry forward. We have learned carry forward. What is carry forward, and what for carry forward there is benefit. That is why carry forward. And what is the benefit is a reduction in tax liability. That is the benefit. Now next aspect, important aspect, very important aspect is set off. Loss, whatever carried forward loss is there, Act says you can set off that loss. You can set off that loss against the income from other heads of what you call income from other heads of income. Income from other heads. Income from other heads. This loss, business loss, if you have got business loss, then you can set off this loss against the income of income under other heads. A business, there is loss, but business has got income from rental income. They have got some what you call buildings, godowns, many things. They have got property and they are on, given on rent, so they get income from that what you call head, income from rental income, we can say. So rental income is there. Then they are selling some assets, so capital income from capital gain is there. So these are the what you call income sources of company or that proprietor who has incurred this, who has got this loss for particular carry forward that loss as per the provisions of tax law. So now Act says you can set off this loss against income of any other head. So what is set off? It is one must know what is set off. So set off, again there is common sense understanding. Act doesn't give any idea about set off, but it is simple. Set off means to reduce what you call reduce your income, reduce your loss from your other income, from your income under other heads, from your income under other heads. Set off means you reduce your loss. This whatever loss you have got, that amount you can reduce from income under other heads. That way, that is called set off of loss. That is called set off of loss. This is important. Important. We must remember this thing. So, set off, after set off, that businessman or company, that proprietor or company or other person who have got loss, they get the benefit. And what is that great benefit? As I told you earlier, the great benefit is like this. After set off, set off means that company or proprietor or other what you call person, they can or they reduce their what you call loss amount from the income under other heads. So reduce loss from income under other heads. So after reduction of loss from the income, naturally income will go down. Income will come down. So you have to pay tax on the reduced income. You have to pay tax on reduced income. And pay tax on reduced income means you have to pay less tax. So that way you are benefited by the provisions of carry forward of loss and set off of loss. That way. Now take the example, if suppose businessman or company for that or any person who has lost in particular financial year, so set up he takes the benefit of provisions of set up. How he will set up? How he would set up that what you call business loss? So that example will take, suppose a businessman or company has got lost profit. He has got carried forward loss of rupees 5 lakhs. That businessman's or company has got a carried forward loss of rupees 5 lakhs, and in the next financial year he has got the income of profit of 30 lakhs. He has got the income of 30 lakhs. Then after taking benefit of this set of provision, what he would do, he would reduce this amount of loss, that is 5 lakh rupees, from what you call your this profit of 30 lakhs. So balance amount will be, after reducing this loss amount of 5 lakhs from 30 lakh profit, the balance amount will be 25 lakhs. So that loss making person has to pay income tax only on 25 lakhs and not on 30 lakhs. So he got the benefit of 5 lakhs, isn't it? If, if suppose there wouldn't have been provisions of carry forward and set up of loss, then straightway 30 lakhs he has to pay the tax on 30 lakhs income. But because of these provisions of carry forward and set up, he only has to pay tax on the 25 lakh rupees, and that is his benefit. The benefit he has taken from these provisions of carry forward and set off. Then carry this set off topic or subtopic is very important, in the sense there are rules, important rules set up, simple set up, how to apply this set of provisions. That is important. Just remember, note down what I am going to tell you right now. They say, Act says, if you have got business loss, you cannot set up your business loss against salary. Now company salary income irrelevant thing. However, proprietor, he is person. Proprietor, if he has got loss and he is in his business, he is running business as well as he is doing some job somewhere. So he has got two sources of income from salary and income from business. So business, he has got business loss. In particular financial year, he has got business loss. So what you call, and he has got salary income also. Then Act says set up provision, this is the sub provision, set up sub provision is very important, in the sense business law, proprietor's business loss, he cannot set up against salary income. He cannot set up business loss against salary income. Then he can set up his business loss from other income heads. For example, income from house property, income from capital gain, income from other sources, but not from salary. So this is important thing. Act is talking about this, how to apply this, what you call, set of provisions for capital for business loss. Then you have got what you call, uh, it is the same topic we were discussing, the how to apply this, what you call, set of provision. Now business loss we have just talked about. Then there is loss under head capital gain. Loss under capital gain, under the head capital gain, loss under capital head. So see the provisions, these provisions also very important. They say, income tax says, you cannot what you call, set off your loss under head capital gain against any other head of income, against any head of income. You have got loss under head capital gain. So set off, now you have carried forward everything, but you cannot set off under any other head. Yes, if you have got income, if you have sold some particular asset, you got the loss. But simultaneously you also sold other asset, 2-3 assets, and there you have got profit. Then Act says this loss under capital gain head, you can set off that loss from the income from capital gain, but not from any other head of income. That is salary, house property income, business income, OS income. No, only from capital gain only. If you have got income, capital gain from other assets. One asset is showing loss, other assets profits, then that loss you can access, you can set off that loss against the, what you call, the against the capital gain of your other assets. Only this is the only this way only what you call that what your that businessman or that company or firm, whatever it may be, they can do the setting off of loss. So then this capital gain loss, another important provision is like this. Short term, we have learned long term capital asset and short term capital asset. If there is loss under the head short term capital asset, under the head short term capital asset. So Act says this what you call loss under short term capital gain, it can be, you can adjust that, or you can set off that loss against the income under long term capital gain, under income. The short term capital gain, loss under short term capital gain, that loss you can adjust against the income under long term capital asset. But remember this thing, but loss under long term capital asset, you cannot set off against the income under the head short term capital gain. So this is important provisions. Short term capital loss under short term capital gain you can set off against the what you call you can set off under the what you call income under the head long-term capital gain. But if there is loss under long-term capital under the head long-term capital gain, so that loss you cannot adjust or reduce or set off from the income of what you call short-term capital gain. And there is income under short-term capital gain, and you have got loss under long-term capital gain. So that long-term capital gain you cannot reduce or set off from the income under short-term capital gain. This is very important provisions. So another important aspect is about loss under head house property, income from house property. Then income from house property, this is very important. They say only loss up to 2 lakh rupees. Loss up to 2 lakh rupees. You can set off against the income under any other head. The point to be remembered that there is loss under the head income from house property. That loss, Act says you cannot set off, you can set off that loss only to the extent or up to rupees 2 lakh only, not more than. If you have got loss, what you call under income from house property, loss more than 2 lakh, 3 lakh, 4 lakh, or 2 lakh 1,000, 2 lakh 50,000. No, all these amounts you cannot what you call set off. Only up to 2 lakh. Other things to be ignored, or you have to forget the amount which is more than 2 lakh rupees as for setting off purpose. Only you have to consider, or you have to think or take into account what you call 2 lakh rupees, the loss under income from house property. That is the provision, the important provision of set off. So these are the things Income Tax Act talks about, what you call this set off thing, set off of loss. So this loss, as I told you, there is no definition. Only one neither your Income Tax Act, nor your General Clauses Act, nor your Companies Act 2013 come forward to help you and tell, Baba, this is the what you call meaning of loss, isn't it? So that way they are not telling. Okay, then we have to scratch our head. I told you, then we have to, there is no other go. We have to scratch our head and imagine what could be this term, what could be this word, loss. So we based on our general knowledge, because most of us learners, most of the learners, I am also learning, everybody learns. We learn from cradle to grave. That is the saying. Some great man has said the learning process starts from cradle and it ends at grave. So then based on general knowledge, he thinks that it may be loss may be more expenses and less income, more expenses and less income. That way he tries to what you call guess the meaning or imagine the meaning of loss. Then some people may also say, so this loss represents based on their common knowledge. Yeah? Remember, based on their common loss represents unpaid expenses. Loss represents unpaid expenses. This is another version of loss. That is, the people, after scratching their head, they come to this type of imagination or result. Then some people say it is a negative income. It is negative income or minus income. So this is, see, this is the people how they invent the things. That is good thing. The thinking man. It is the, because he is thinking man. Man is thinking man. Otherwise he is mad. Then some people say it is simple. It is opposite of profit. Loss means opposite of profit. So this way people, what you call, when there is no definition, then this is the way, common sense we have to apply and we have to understand the thing. Even this Supreme Court has also concurred with us the way we are going ahead to find out the meaning of something. Supreme Court also says, in many judgments they have said, you can scratch your head and use your common sense and come to the, what you call, meaning of that word. Okay. So I think I have finished this topic, loss, its carry forward and its set off. So these are the things, that is the common man's understanding about loss. Then after scratching our head, what we get about loss. Then important aspects of loss, that is carry forward and set off. Carry forward loss, how many years you can carry forward, and what are the preconditions for carry forward. That is, one has to furnish a return of loss to the department within the time prescribed or time given in the Act. And that time we have learned for company 31st October, and for other people, if their income, their sales or gross received goes beyond 1 crore rupees, then for them also furnishing date is 31st October. And for others who have sales and what you call gross receipt up to 1 crore, for them furnishing date is what you call this 31st July. So these preconditions for carry forward and set off. Then we have learned carry forward, how long one can carry forward loss. So 8 years is maximum. It is better to stop the business. If suppose loss is there, no profit, carry forward 8 years, who will carry forward? It is better to close down the business. So, but some provision is there. If suppose businessman learns from the experience and he earns the profit, then it is beneficial for him, or it brings benefit to him to carry forward the loss. Otherwise, there is no point in simply because Act says carry forward 8 years, carry forward. There is no meaning in that thing, carry forward. Then the period here, then set off rules are there. They call it set off rules. Those are important. Then how to set up the things. And business loss, you cannot set off from salary. Then your capital gain, long-term capital gain or short-term capital. Both the things cannot be set off against income under any other head. But they can be set off against the what you call income from head capital gain only. And there also subtopic is there, long-term capital gain, loss under long-term capital said, you cannot set off that loss from income under short-term capital gain, but income under short-term capital gain. But loss under short-term capital gain, you can adjust or set off against the income under long-term capital. These are the important provisions. Then loss under HP, 2 years, 2 lakh only you can carry forward and set up. These are the topics, subtopics, and topics and subtopics about what you call loss, carry forward, and set up. So this is enough. I think there's act has act has spent thousands of words. Act has spent thousands of words to tell you about the law, tell you about the all aspects of the laws without telling anything about what is loss. The Act has spent thousands of words to explain or tell you everything about laws, except it doesn't. It doesn't tell you what is laws, but it tells you every aspect of every other aspect of loss. So let us go move ahead. We have to move like this only. I think I have completed this topic. This is very important basic things about income tax. Then we'll we'll meet you again with new basic things. And till that time, I say goodbye to you, and have a what you call nice day. Thank you, thank you very much.